Hi, everyone. It's Joe Veneri, the host of Fitt Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Today, I'm joined by Courtney Reum, co-founder of M13, a brand development and investment company. In this episode, we discuss the shifting venture capital ecosystem, trends in health and wellness, and the firm's investments in companies like Tonal, Headspace, and ClassPass. Plus, Courtney shares his frameworks for evaluating potential investments. Before today's episode, I wanted to share some updates to the Fitt Insider platform. As you might know, in addition to this podcast, we send a weekly newsletter to help operators stay informed and make better decisions. We also launched an industry-specific jobs board filled with hundreds of openings at top companies, and we're actively investing in early-stage health and fitness startups. To see what's new or to get in touch, visit insider.fit.co. Hi, Courtney. Welcome to Fitt Insider. Thanks for joining us.
Thanks so much for having me. Great to be here.
Yeah, looking forward to today's conversation. And just to kick things off, can you introduce yourself and tell us about M13?
Sure. My name is Courtney Reum. I'm the co-founder, along with my brother Carter, of M13, but we actually now have an incredible team behind us. We call ourselves a kind of a consumer tech holding company, whereby we start brands and then we also invest in brands. And so we're at this unique kind of nexus of being both entrepreneurs and investors. And I think we feel really lucky that some days we get to be really entrepreneurial. Some days we wear our investment hat, and hopefully iron sharpens iron so that we get to do some of both and bring the learnings to the other side of the house, whichever one we're working on.
Yeah, and then certainly today, share some of those learnings more broadly. And I think maybe just getting into it, you alluded to it, this kind of like holding company structure. There's a fund and a studio you're investing and building. Can you just talk about maybe how you got to this point? What was the thought process that led you to this structure versus something else, and maybe the advantages and challenges that you're encountering in trying to have those moving parts?
Sure. What got us here, without going into too much deep background, is my brother and I are both reformed Goldman Sachs investment bankers. My brother was always kind of more interested in tech. I was always really interested in consumer products. Given the nature of this podcast, I'll share that I worked on like Vitamin Water's first deal when I was at Goldman Sachs. Not necessarily a product I endorsed, but an incredible marketing story. I was fortunate enough to meet Kevin Plank in my early 20s, who a lot of people will know is the CEO and founder of Under Armour, or was the CEO until just recently. And you meet a guy like Kevin Plank, whether you consciously or subconsciously realize it, you get inspired. And so my brother and I left about a dozen years ago to start doing our own things. Our first venture of all things was called Vive, or is called Vive. It was the first organic and sustainable spirits brand. It had acai in it, a bunch of things like that. And very different than what we do now, but it was a great to build something from the ground up 101. Especially that space, it's really kind of hand-to-hand combat, if you will, in terms of getting into new accounts. And from there, really just broadened our scope into all things health and wellness, so that by the time we sold Vive about 5-6 years ago, we had sat on the board of or advised about a dozen brands, some of which did really well, everything in food and beverage and health and wellness, and then probably invested in another couple dozen more. So that was really when the D2C boom was happening, the Warby Parkers and the Bonobos and the Pinterests and the Lyfts and brands like that, many of which we were involved with. And when we actually sold Vive, we first thing we did was actually kind of write a blueprint, a book called Shortcut Your Startup, that we felt like was a kind of a generic blueprint for where we thought the world was going. But we said to ourselves, rather than start one company, let's try and start this holding company so we could selfishly have a little bit of our cake and eat it too, meaning invest in great brands and partner with them, as well as start great brands with people. So far, it's worked incredibly well. And I think this was 4.5 years ago, we started thinking about it. So you're starting to see more studios pop up. There's great folks like Atomic, who started Hims. I was with one of the co-founders here yesterday. And then there's also a lot of obviously great venture funds, and some of them are starting to think about studios. But I really think we were one of the first ones to think about kind of putting this all under one holding company. So we raise our venture funds separately. We fund our businesses separately, but we actually raised money at the holdco level to fund our operations for the last 3 years and help get the enterprise going.
Yeah, it's awesome. Definitely a lot of different experiences bringing you to this point where you can there's so much that's said from investors being a value add, right? Beyond the check and what that means and some of the different jokes and memes that come along with that. And I think, and Anthony and I at Fitt Insider kind of think of ourselves in a similar light, which is we were operators who built businesses that happen to understand the fitness and wellness space with a different lens and perspective than most people. So we want to get in there and be able to help. And obviously you all having that from the brands and the network perspective, being able to lend a hand and actually have an impact. So it's cool to see how the structure of that works out.
Yeah, exactly. I think it makes such a big difference when you're, say we're looking to invest in a company, to be able to say, we've actually started 10 brands in the last couple of years, some of which might be relevant to you, and the learnings almost certainly are. And then, 80% of the people who have worked for us have been operators. And so to actually have that, in addition to having to invest in a couple hundred companies now and hopefully having some pattern recognition of that's a pretty powerful, I think, story to share with an entrepreneur or someone else we're looking to partner with.
For sure. And then when it comes to, so you have that and you're taking that approach and continuing to build it out, both, start and invest in brands. But at the same time, the kind of venture ecosystem is changing. There's solo GPs, the family offices, traditionally much later stage firms investing at the seed round. How are you thinking about this shift and what it means for M13?
Yeah, it's a great question. We could probably spend a whole podcast just on that question. But I would say, in short, if it gives you some idea, we're finishing deploying our second fund. Therefore, we'll have a third one coming out here in the not too distant future. We'll probably raise a much bigger third fund, but actually have pretty much the same strategy as our second fund to show you, how much the landscape has changed. And there's a lot to be said about the industry. I mean, I think on one hand, when everything's kind of been a little bit up and to the right, some of the everyone thinks they have great access, everyone thinks they have great deals, everyone thinks they've had great results, and maybe they have. But I think the final chapters of these have not been written largely, even though there's also been an immense amount of wealth created. But what I do believe, both in venture and then as it relates to my personal capital, is I still think if you are truly top tier venture, top tier decile or top decile funds, that is still your best chance to create outsized returns of almost any asset class. There's obviously always outliers, but when I look at other asset classes, top tier venture, I think is still going to have a great ability to outperform. And besides the fact that we love creating and being innovative, I still think it's a great place for people to look to invest, as long as they're doing it with the right people or doing it smartly. There's just also a lot of signal and noise out there in the current environment for sure.
Yeah, it's kind of the cream will rise to the top, and these things will get sorted out in terms of who can be in it for the long haul and what those various approaches look like. So yeah, it'll be interesting to see. It's especially, when everybody, so to speak, is winning and everything's going in a crazy, as you said, up and to the right. It's easy to jump on board, and so when things take a turn for the worse, maybe that'll also shake out the landscape and continue to evolve how that looks. Yeah, I was curious to get into a little bit of the specifics around how you think about check size, kind of core thesis, how you're typically even sourcing deals, just to give people the sense, right there from an audience perspective. There's kind of two sides that listen in here, which is like a lot of founders who are looking to get to folks like yourself, potentially have a conversation about what they're building. But at the same time, a lot of people who are trying to break into venture and want to be investors and maybe move over from whether it's MBA or corporate or even iBanking. So yeah, just how are you thinking about the basics, the framework, and the kind of core thesis aspects?
Yeah, so at M13, we're purposely fairly generalists, but within that there are kind of 5 or 6 areas that we're pretty focused. I think health and wellness and a lot of digital healthcare stuff are certainly some of the key areas. In the past, we've done a lot of, say, food tech. My brother and I's background has a ton of food and beverage. If you walk into any Whole Foods, there's probably no less than 50 products we've had a hand in. For where I think the world's going, we don't really do beverage anymore. We've kind of struggled to find as much food tech as we like, but we're certainly open to it. But I think even prior to COVID, but certainly in COVID, I think everyone's made us abundantly aware of it's made us abundantly aware of our own mortality and our own need to have more self-care. So, the health and wellness aspect of our fund is really top of mind at the moment. In terms of the process or where we source deals, I've been asked this question 1,000 times and I never have a great answer. I think so much of it is truthfully kind of a mix between pitcher and catcher, or inbound and outbound. If you think you're getting all inbound, you're probably not doing enough outbound. If you're doing all outbound, you probably need to do something reputationally to get more inbound, because I do think venture is an asset class where brand and reputation probably still matter more than almost any other industry, vis-a-vis hedge funds or private equity or what have you. But I also think that it really does come down to, if I was trying to get an LP in my new fund, or I was trying to convince an entrepreneur to take our term sheet or win a deal, I still don't think there's much better proof point I can have than another founder saying, I would not be here, or I would not have been able to do X, Y, and Z without M13. And part of our model is really focused on, I think ventures becomes a game of write some checks, try to be helpful and cross your fingers. And we think we've created a structure with the way we're set up around our infrastructure, and that's human capital, and that's data, and that's other things we do, whereby we're hoping that we can help play a more active role in helping not just pick the winners, but make the winners. And don't get me wrong, that's not a substitute for great founders and everything else, because that makes your life easier. And really, of course, it's the founders and the entrepreneurs that make it happen. But we think we have a lot of unique tools in our toolkit to help do that. And so I think that's a big part of what we look for when we say, for our investment memos, when we're deciding if we want to invest in something. There's been a lot of businesses where we're like, this is going to be a successful business, I think, but our ability to impact the outcome is not as high as we would like. So we're always kind of looking for both.
Yeah, I think all those points are so important. And a lot of things you're talking about, the value of brand, and really that in many ways speaking for itself, but also the ability to partner with the right founders who, you have some type of relationship with, and the connection makes sense, but you can add value in such a way that it impacts the outcome. When you're looking specifically kind of at founders and teams, are there different intangibles or qualities that you look for that stand out among a class of, quote unquote, successful founders? Are there attributes that you've identified to say, hey, we were looking for this in the founding team?
No hard and fast rules. I think some of it thankfully is pattern recognition now. Sometimes you know it when you see it. Sometimes it's not whatever you're looking for when you see it. I generally ascribe to the Y Combinator theory of like, if it's a jump ball, 2 co-founders or more, and one has one, I would probably usually go with styles make fights, and so to speak, as they say in boxing, and having multiple co-founders with complementary skill sets and just for the thought leadership and the bouncing ideas, all that makes a big difference. So I think we tend to like that. And so it's not any one thing, but even when you get like, like a Travis from Uber, who's kind of a more domineering single founder, even in that case, there were multiple, but he got most of the attention. I think the biggest thing today is realizing that, hey, founders are humans too. We're fallible. We all have our blind spots. I'm not looking for the person who has all the answers. I'm looking for the person who's acutely aware of what their strengths are, acutely aware of where their blind spots are. And I always say, I think if I had to pick one of my few superpowers, it wouldn't be that I know all the answers, but I think I'm pretty good at knowing who or where to go for those answers. And in the connected world of everything else, we're all, inundated with information. So it's not that the information isn't there. It's knowing how to parse through it and who to go to and where to go to and when to go to them. So I think that's a big skill that we look for in founders and CEOs.
With that, and you talking about this, kind of holdco model, backing companies, starting companies, there's a couple different ways to think about this. I'd be curious to get your thoughts. It's like, oftentimes when you hear investors talk about some of their most successful companies or founders, it's like, well, the ones that they don't hear from often are the ones that are doing well enough that they're obviously making headway. But then a flip side of that is like, hey, we want to be able to add value. And especially in the kind of studio model where we're like working hand in hand with them, how do you think about them needing help versus kind of them reaching escape velocity where they actually don't need you? And if there's a benefit or a risk in that?
Yeah. We have definitely written checks, don't get me wrong, for people who are like, great, nice to have you, but I don't know that we need you, right? And hopefully our job is to be there as they need us, and not everyone wants us in the same doses, don't get me wrong. But I think we've done a great job proving our value to almost every founder over time, so that nobody wants us to just be a passive check. But, I also think, as with anything, it's so much about ruthless prioritization and reprioritization, because we do have these outsized resources of, people that work for us that are dedicated to brand and comms or data strategy or culture and talent. We deploy them cross-functionally on both brands we start and brands we invest in. And so it is always a challenge to prioritize and reprioritize. And you hear a lot of people say it's the 80-20 rule in reverse, right? Your bottom 20% of your companies are taking up 80% of your time. And so that's always the challenge of, how do you not have that happen? At what point is like, have you given it the old college try and maybe this one just isn't working versus one that's got some friction with scaling? And so it's a continual challenge. But I think the best thing you can do is just have founders and CEOs feel like, hey, we have entrepreneur empathy because we're doing it and we've done it. And so we know it's, when you sometimes read about it, it sounds like it's just this rocket ship, but really it's the ebbs and flows of it. And just understanding that that's how every single company that I'm intimately aware of has never been just a rocket ship of success. Even the ones that seem that way have had the days they almost went out of business or what have you. So it's just being ready and available to be a partner and be in the trenches when that happens.
And then maybe turning some of that thought process to founders and entrepreneurs. Is there advice that you typically give a founder, whether that's about fundraising or operating their company? You talked about, even from your side, like maybe not always being the smartest person, but knowing where to get the answers or the prioritization and knowing what to work on and how to devote time to that. Or is that the same kind of advice you would give a founder? Or are there things that stand out that you would tell them as they're starting to grow and scale their company?
Yeah, I mean, we practically wrote a whole book about this. As I mentioned earlier, we wrote the book 3 years ago called Shortcut Your Startup. So hopefully there's a lot of great nuggets of wisdom in there. I don't know that I could pick out one, except for to say that it's so person and company specific. It really depends if you're a first-time founder versus a third-time founder. It's always got to be the right idea in the right context at the right time. And I think one of the biggest things that I see on companies that I've either started or invested in that failed is, it's got to be those three, in my opinion. It's got to be the right idea, the right context, the right timing, and certainly the right team to execute it. And if you have two of those three, it generally doesn't work. And so that's one lens I always encourage people to look at things through.
Yeah, definitely. The timing piece is such a huge part of it. On the flip side, so this question I pose to investors that we have on the show because I get it so frequently, and I obviously try to do my best to answer it, but would be curious to get your input as well. I mentioned lots of different people trying to kind of break into investing. Is there an answer that you have had to say like, hey, how do I start down this path? How do I maybe get a job here? How do I go about raising a fund? Just anybody who's interested in kind of venture or investing as a career path.
I think it's so much about, there's obviously, as I said earlier, there's a lot to brand names and venture. But if I was starting out and trying to break into it and I didn't have some great connection, I think I would just look for the right mentorship. That goes for almost any industry. But to learn the venture game, it's become so differentiated in that if you're a growth equity firm investing in Series C, as in Courtney, that's very different than if you're investing in pre-seed companies. So if a firm with a great reputation wanted to take me on, but they were doing growth equity and I really want to do early, I'm not sure that's going to be that valuable because it starts to be a pretty different analysis and core skill set. So I think it's just about hustling really hard to find the right firm, but then ultimately the right people at that firm who are really doing what you want to do and beg, borrow, and steal, if you will, to get their attention and to see if there's a way you can kind of be even an intern or apprentice, because we get people come to us all the time who are, been lawyers or had careers and they're in their 30s and they want to do this. And I'm not saying it's rocket science, but just because you were a great lawyer doesn't mean you can jump in and be a venture capital investor. And I think, again, in a strong economy, it might seem like you can, but I think you really want to be aligned with the right people to give you that mentorship. And then eventually, it is also a game of relationships, but those have to come after. I think there's some substance to what you're doing.
Yeah, I totally agree. It's funny. Typically give similar advice in that go find the absolute smartest, most capable investor, firm, person that you can, and do whatever you have to do to be around them, whether you work for free or however you get are able to bring them deals or provide value. But at the same time, it's create as much work, samples, anything publicly, and demonstrate that you can get allocation in a deal, that you can befriend a founder or, have some insight into what's coming next in a particular area. If you combine this, whatever that brand or portfolio or work sample that you're able to build with being around that person, it's probably chances are it's going to work out, that you're able to demonstrate that your abilities versus just showing up in a line like everybody else.
Yeah, absolutely agree.
Cool. As we get toward the end of the conversation, I know you mentioned that at M13 you're investing pretty broadly, but kind of have particular interest around health and wellness. As you look at that sector, obviously top of mind in the pandemic, as we're post-pandemic or hopefully putting it behind us. I don't know what the correct phrasing is at this point, but what trends are you excited about as it relates to health and wellness, and where are you seeing different opportunities emerge?
Yeah, well, let me just also say, on a personal note, I mean, I don't even remember who, but a friend sent me you guys' Fitt Insider newsletter, and I just thought it was a great. Right when I read it, I was like, "This is great. This is a great summary for people who are tangentially in the industry. It's a great summary for people who are wanting to get into the industry, and so it's nice because even with M13, I'd say my brother, myself, our other partners have all really aligned our interests. And there's a funny clip of, I think it's Tom Brokaw or Dan Rather, one of those iconic newscasters from like the 80s, going, and now we have a segment coming up on something called health and wellness, whatever that means, and he kind of chuckles. And that's not that long ago. It's 30 years ago that people were like, what do you mean by health and wellness? But I think personally, I was a college athlete, thought about trying to play pro at one point, and just have always loved sports and everything related to it. And so no matter what age you are, I think hopefully as we're all living longer and thinking about longevity, we're actually, I think I mentioned you offline here, we're actually starting kind of a vitality business with Tony Robbins and Peter Diamandis that we're really excited about. But I think all those things, it's just health and wellness means so many things now, but it's great because it encompasses mental health, physical health. You've had a lot of people who have been on here talking about mental health, so I won't talk about it, but there's so many people where you can't even have your physical health if you don't have your mental health, and vice versa. And so there's so many interesting trends going on in the space. We were early investors in ClassPass and Tonal and Headspace and all those things like that. But the landscape has changed so much. So it's hard to say because it really depends if you're talking kind of mental health. It depends if you're talking fitness. It depends if you're talking more wellness. But, I think you look at something like fitness, there's been a lot of great advances. There's a lot of really interesting things going on. I'm an investor in a gym in Los Angeles where I primarily live called Monarch Athletic Club. That's really interesting, trying to be a one-stop shop where you'll have your concierge doctor there. A doctor actually runs it, and they'll take your blood. They'll assess all your metrics. They'll help get you on a diet plan. The gym has an incredible group of personal trainers, probably the best collection I've seen, but they also have some incredible recovery stuff, Normatex and Theraguns and infrared saunas and cold tubs and hyperbarics. And they have that all under one roof. And I think even 5 years ago, no one was ever doing stuff like that. And these trends are always going to generally start in the coasts or the New Yorks or LAs. But I think it's amazing. And yeah, I'm biased because I'm an investor, but I get to go into a gym every day where I can kind of get everything that I need in terms of my fix. And so I still think even when you look at something like fitness, recovery is not talked about enough still, as like that is really still some of the untapped stuff for the future. There's incredible advances on fitness and strength, but the corollary of that is for every advance in fitness and strength, you have to have an advancement in recovery, I believe. So there's a lot of interesting trends on that. But I do just think what's interesting to me is that one thing that we do at M13 is really look at, where the puck is going, as they say in hockey. What's the future of consumer behavior? where is that consumer discretionary income being spent. And I don't care who you are, what your psychographic is, demographic, age, weight, you are thinking, even if you're not spending more on it yet, you are thinking and doing more for kind of your health and wellness than you ever have. And I just think that's a trend that's only going to probably get bigger. And COVID is probably really showing us that.
Yeah, absolutely. That's so much of that is on point. And I think this idea that we're focusing on health and wellness, and that those terms are even evolving to mean so many different things to so many different people. And even in and of itself, that being a huge step in the right direction, to your point around like even thinking about it more, bigger share of wallet going towards it, increasing access to any and all of those things. Down the path of the Monarch Athletic Club, I think it's a super compelling idea, and we're starting to see more of these concepts pop up. But it's also, as this broader definition of health and fitness and wellness evolves, in some ways it's still so siloed, right? That you have fitness is one thing, nutrition is another thing, sleep is one thing, mental health, and none of that is connected to healthcare at all in a way that a doctor will see or utilize. So I keep coming back to this idea around how do those things get vertically integrated, whether it's one brand or a series of brands working more closely together, or just the interoperability of that data and insights in a way where, it's more turnkey. Because even for someone like myself, and maybe it's similar for you, like I'm spending all kinds of time and money on these things, and it's still, I have 25 different products and apps and logins trying to piece it together. So have you seen anything on that front, or have any thoughts down that path of how we start to bring it together in a way that we can take action on it?
Yeah, it's a great question. I think it's one that everyone should have top of mind. Again, there's no silver bullets, but you hit on a bunch of things in what you said. Since I gave a long answer to last, I'll give a shorter answer to this one. But I would say that in my synopsis of it all would be the future for this country, meaning the US, has got to be one where our debt load is really scary. What else is really scary? Health percentage of GDP and how fast that's growing. Because we have a lot of people who are sick in this country. And the only way that's going to change is if we get out front, and it's preventative, and it's symptom based, it's preventative, so that when I'm 40 or 30 or 50, I'm doing things that who knows how many dollars I saved, and multiply that by 135 million people. We as a country will be a much healthier country, both in terms of our balance sheet, but in terms of our population and citizens too. And I think that's a really important part of it, is just flipping the paradigm of how people approach these things.
Yeah, there's so much in there. Like we could probably, another topic that's worthy of an entire podcast.
If that's you inviting me back, I accept.
Oh yeah, we'll get it on the calendar just as soon as we wrap this one up. And maybe to that point, as we come to a close here, you alluded to raising another fund, a couple maybe projects you're working on behind the scenes. Is there anything that you would share, or maybe point people to have on the radar as maybe a tease as we wrap up?
Yeah, sure. I've kind of hinted both of them. I believe that the good old SEC limits me from saying too much on our next fund, other than the fact that we certainly think we're a fast-growing franchise. So we will be investing in a lot of great companies, and to do that, you have to raise more funds of all different sorts. But we will keep doing that, and we'll keep doing brands with people. The one I mentioned with Tony Robbins and Peter Diamandis called Life Force. We have a great founding team. It's going to be coming out early in 2022, but it's all around right now. You kind of alluded to this, but we live in a world where people with money or access get to try all of these things, and the rest of us are just kind of left out in the cold. And so can we, again, create some of these products where what previously used to be for the 1%, can we bring it maybe not to all 99%, but can we bring it to the masses? So if I could do something and create a suite of products or a bundle of products with Life Force, where for a few $100s a month per person, I could dramatically improve your health, I think most people can and will try to spend on that. And so that's what we're trying to create. We're not trying to create $1 billion company for the sake of it. Luckily, we're all in a position where it's not about the money, but we're trying to create something for maximum impact, where we go, wow, we can affect the lives of millions, maybe even tens of millions if we're really successful, of people, by giving them solutions to take control of their own health at a price point that most people are willing to make the trade-off to really feel the difference. And so that's the kind of stuff that we're really excited about with something like LifeForce.
Yeah, it's awesome. We'll definitely be following along as that comes together and everything else you have going on. For folks that are interested, and we'll get you out of here on this, what's the best way to follow along and maybe learn more about M13?
Yeah, well, we have a lot of people at M13, and it's not that hard to find anyone's information on the World Wide Web anymore. So people are always welcome to reach out. Our website is m13.co. That's .co, not .com, because the .co has gotten kind of trendy now. And mine's just my first name at m13.co. So people are always welcome to reach out to me and other people on our team.
Awesome. Courtney, thanks for spending some time today. Really excited to share this conversation.
Thanks again for having me. It was a real pleasure.
Thanks everyone for listening to today's episode. For more from Fitt Insider, visit insider.fit.co and subscribe to our weekly newsletter for insights and analysis on the business of fitness and wellness. Then go ahead and subscribe, rate, and review the podcast. See you next time.